I appreciate everyone hopping on here with us tonight. So here we go. We've got the Rigsby Storage. As you can see, this is what our rendering is going to look like. This is in San Antonio, Texas. And yes, this is a 506c investment offering. So just to do a quick highlight overview, this is going to be a facility roughly 95,000 net rentable square feet. It is a little over 100,000 square feet total. It's just, you'll see it later, it's on about 2.5 acres. So we're excited about delivering this product to this market as well as to our investors. Just to highlight some of the structure of the deal, we are doing a 70-30 split in favor of the limited partner. That is our investors. So we are offering a 10% pref. We're targeting a 25% IRR with a 55% return on investment inside a 2-year hold period. We're looking to close on this project by October 2nd, and it's just over a $14 million total cost and a 6.8 raise. We'll go into each of these line items a little bit more in depth as we move forward. Love to start off and just kind of give a quick overview of the team that is presenting this, some of our backgrounds, and as well as kind of move forward with some of our partners outside of the general partnership. I am Wesley Yates. I am the founder of the Military and Patriots Investment Group. I have a background mostly in multifamily, but I've also done some other endeavors inside of hospitality and mobile home parks, as well as some financing. I spent 9 years myself in the Marine Corps, was recognized by Congressman Ralph Hall before he passed back in 2013. Did a lot of things in my career that I've implemented to, I could say, the strategies that I have took down what I've got for commercial real estate. I do have the ambition to want to reach $1 billion worth of assets under management. And I would not be able to do that if it wasn't for my partners, as far as the investors, as well as the team that I have here tonight. One of the confidence and I would say points of partnership and enthusiasm is the gentleman to my right here, Mr. Barry Sherman. Our team has made a partnership with the S3 team to have kind of both sides of this table, I guess you could say, covered, the acquisitions to the development, as well as the operations and management as well. Barry, I would love if you don't mind saying a few things about yourself.
Well, Wes, thank you. Good evening, everyone. Nice intro, Wes. My name's, as Wes conveyed, Barry Sherman, based out of Colorado, but with a national footprint, in the storage market. I'm going on nearly 3 decades in it as a practicing architect, a contractor, and now a developer over the years. Been fortunate to be in this asset class for a long time. It's very close-niched, well-connected. We've had the ability to design, construct, and develop a combination of a couple hundred projects across the nation. We're thrilled to be teaming with Wes and his team. I'm supported by a great staff too on my side. We work from early diligence through all the entitlements, design, etc. We've been particularly paying close attention to costs, commodities, and ensuring we align ourselves with the right general contractor, property management group. Beyond that, Wes, I'll be happy to take any questions that show up in the chat, but nice to meet you all.
Thank you, Barry. Kind of to put a name and a face with that, I'd love to go ahead and say, here's the team, and like to give everyone an opportunity to go around and kind of give a little bit of their background and their focus here for the team. Anthony, how about you start us off, sir?
Thank you very much, Wes. Anthony Krupa here. My trade line, as I would say, I was born and raised in the REITs. For nearly 7 years, I worked for Rigsby Storage, helping oversee anywhere from 15 to 23 stores in the Carolina region here. One of my specialties, or one of my things, was to be able to take a brand new facility and do the lease-up phase, as well as transitions. When Extra Space was acquiring bigger companies and stuff like that, that was one of my biggest roles, is to be able to go in, do training, hiring, and oversee the operations of those facilities. So that's where my big background is, and that's why I'm specializing in the operations manager. With that, I'd love to pass it over to Radhika.
Thank you, Anthony. Good evening, everyone. This is Radhika Ganatra. I go by Radha. So if you hear my name as Radha, that's me. I have been an entrepreneur since more than, I think, 3 years now, or actually 6 years now. 3 years in real estate and 3 another years in healthcare industry. I started off as residential mortgage broker and then commercial mortgage broker, and now serving as a acquisition manager with MPIG. Before coming into real estate world, I was working I was owning a staffing company, healthcare staffing company, in a partnership where we had more than 80 employees. My in-field experience is complemented by 2 college degrees, including a postgraduate degree in human resource and finance, and also a BBA. Thank you, everyone. Daniel, take it away.
Yeah, thank you, Rada. Pleasure to be with everybody and the team here tonight. I'm Daniel Lee. I'll share a little bit about myself here. I come from a background in quality and process management and vendor development as well. So I've also had my hands in a little bit around new product design and commercialization. So on this side of the house, we're down in the details on the project around scheduling and potential hiccups along the way. So appreciate everybody's time, and we've got some exciting stuff to share with you tonight. And with that, I'll pass it over to you, Peyton. Thank you.
Thank you, Daniel. So I'm Peyton Dunseth. My main role in the team is going to be the analyst, the underwriter. Really, my biggest thing is looking at a subject property, pulling third-party reports. We want to look at the competition in the area. We want to look at population density. We want to look at all these things that go into making a commercial real estate project successful. And that really falls on me. Of course, I'm always working with Anthony and Radica to make sure all of our third-party property management reports are coming in properly and they're in line with what we think we can do. But I've been working with Wesley for a handful of years now. Always been the analyst, always been the underwriter. My background's coming from the U.S. Army. I was a medic for 5 years in the U.S. Army. Met Wesley before exiting the military, knowing I wanted to get into this life, this role. Wesley was able to bring me on his team, and ever since then we've been hitting the ground running, learning every day, learning as much as we can every day. So it's been great, and always willing to go the extra mile and put in the extra hours to make sure that our projects can be successful. So Wesley, I'll hand it over to you.
Thank you, team. Just to look at us as a general partnership experience total, as you kind of heard from everyone's background, we've got over 300 self-storage facilities that have been developed. As you heard, that's mainly from Barry. But overall, we've got over 60 years of combined experience in real estate development and construction, as well as the management. So we've a little over 250 million assets under management between all of us, and that's across commercial real estate as a whole. So we've got the experience to support what we're offering y'all tonight. And we all bring a different vantage point and a different angle that we look at this stuff. But when we come together, it's one of those where if it sees something, say something. So we're all here to back each other up. Yes, we got that military background, we got that patriot background, and years of experience of doing what we're doing. But we could not do this without our strategic partners outside of just the general partnership. This is just a few of the big names and the big logos that are assisting us through the development, construction, and operations. We'll kind of highlight a few of them as we kind of carry out the development plan and business plan throughout this. So to kick it off, I think one of the key partners we have is within our management side. So Anthony, I know you've been working with Argus. How about you go ahead and highlight a few things that you really liked about the Argus team here?
So one of the things that we really like about the Argus team is their experience. Right now, they're managing over 250 facilities nationwide. And with this, why we really particularly like them for this particular property is because 45% of their portfolio that they manage are all Class A. It's similar, as you can see on the screen here, brand new REIT style, very nice facilities. As well as the other thing that we really like them is the flexibility. They're willing to work with us, and meet our goals and stuff like that for our investors, and understand that what we're looking for our returns, for our investors. That was one of the nice things that we really liked. Definitely one of the other keys is that they've been voted, ISS, Best in Business, for a few years now. And so that really shows that their commitment to to us and to other facilities and other owners, operators.
Yeah.
With that, Wes, did you have anything else to add to that?
Yeah, I'd love to hear, from Barry. Barry, I know you actually have not just a business relationship for a good period of time, but, a good friendship with some of the gentlemen working over there, Ben and Corey. Do you mind sharing, something on these guys as well?
I can speak to them. This is a solid group of management. They've managed facilities of mine in the past, managed them up to a point, as we are strategically looking here, up to a point where we can maximize our revenue and look for an exit. Not only does Argus bring the property management side, as we're going to bring them on board here, they also can assist us with the exit side on the brokerage piece, so we can get very strategic with them along the way. They come with over 2 decades of experience also. Ben Vestal and I both sit on the State Board of Directors of Colorado. Corey's solid, based out of Tucson. As you can see, they've got a national footprint. They've been highly successful, and I think we've got a great management team of ours.
Yes. I'm very excited to be working with them. One thing that we liked about Argus as well is on top of the flexibility, is they allow us to kind of put our name on the building and help us back and build our brand with their experience. So that was another reason that we really liked to be able to build something with them. Moving forward, kind of moving into why self-storage. Some of us here may not have invested in self-storage before, and so I figured why not wait any longer? Some of the things that I really like about the storage, coming from my background, predominantly in multifamily, is really the overhead. It's a lot easier to scale, in my opinion, in storage. The expense to income ratio is closer to a 35%, where multifamily is kind of sitting at that 58 to 60% on average, which means that's more dollars going to our investors as well as ourselves. And we're really seeing the storage industry as a whole kind of really take over, and seeing the demand, not just as I would say per person per capita increasing, but also the amount of duration. So really looking at that. Anthony, I think you got a few points that you really like, from your background being in self-storage, that really has just kept you in this industry for as long as it has.
Yeah, definitely one of the things that, and actually me is, but it's kind of, forgot to mention before, I also own and operate my own facility. It's a smaller facility, but one of the things that I really like is the ability to, the ability to raise rents, without waiting a full year, as you do in multifamily. Another thing is just the resilience of it. Definitely, as you can see on the screen, in 2009, it only declined by 2.9%, which multifamily took a really big hit, and is still taking a big hit, possibly even today with the interest rates that it's going, where self-storage has really not been affected as significantly as it has for multifamily.
Yeah, all good points. All good points. Well, looking at the recession resilient, I think that's a key point here with the climate that we're in today, and looking what the months carry us through to the next few months. I think I would be dumb if I don't mention, Barry, with your experience kind of being through some of the other downturns, how do you feel that storage specifically has fared during some of the other downturns as you've operated through multiple recessions?
Well, thanks, Wes. I'm going to age myself, probably that this might be, the fourth dip, I might call it, from, the late 90s or, the mid 2000s, to even about 6 years ago. But, what happens in storage, and I think it's been very critical to watch over the years, is those teams and those groups and developers that prep, and I'll say push through this curve, watch the backside. We run about a 4 to 5 year cycle, and it's been very traditional to watch what we're seeing today. We got higher interest rates, cap rates are moving a little bit, but it turns. And, compared to the other asset classes, as you've been asking, it's been pretty resistant. Unfortunately, we have all the normal things in life that this product brings, from divorce to death to colleges to moving. And those things in life tend not to change. It's held its own, Wes.
Thank you, Barry. Sorry, I didn't mean to date you there, sir.
That's okay.
Moving forward to the market itself, we're happy about where we're looking at, with this one being right there on the east side of San Antonio. But I believe our analyst Peyton here's probably spent more hours than anyone diving into these numbers and looking at it as far as just a high level view. So Peyton, you mind sharing a few of your key points here?
Yeah, sure. So, any very successful commercial real estate project, we want to look at the market demographics. Usually that's step one. With San Antonio being a major MSA in this country, I think they're actually the 24th largest MSA. All positive things come with that, right? A very strong population density within the 3 and 5 mile radius. You see that on your screen, 178,000 in the 5 mile. So very strong population density. And with that, we actually, after diving into our third-party store track report, we found out that this specific 3 and 5 mile radius has a projected population growth of approximately 5 to 8% over the next couple of years. So very strong market demographics. Our household income in this market supports the business plan, supports the underwriting, supports the project as a whole. So the demographics in this market are very strong growth over the next 5 years, Wesley. And I think that's why this project will be very successful.
I agree here. I know we also looked at more of the numbers down specifically to storage, looking at our competitors. I know you spent, a lot of time looking over this. I know Barry and his team looked over this as well. But how about you give us a little bit of background on how many sets of eyes we've had on this and what all these numbers really mean?
Yeah, exactly. So this slide here is coming from another third-party report we always want to pull in our projects, the feasibility report. We really want to look at the supply and demand in the market that we're going into. Okay. So with this third-party feasibility report, we can see within the 3 mile radius our population. We can also see our total square footage from our competitors in this market as well. And with that being said, we have a roughly 3.5 square foot per capita in this market, which is significantly under the Texas average Now, this feasibility study is stating an 8.22 square foot per capita in the large Texas MSAs. Now, when we pulled our store track report, the number's actually gone up within the last 6 or 7 months or so, right? Now the Texas average is just over 10. So we're significantly undersupplied in this market. And with that 3.5 square foot per capita, there's actually less than 1 square foot per capita for climate controlled units in this market, which falls right in line with our business plan, with our project as a whole. Our projects will be over 90% climate controlled units. So we're seeing a 3-mile market here, significantly undersupplied with a specific product, and our build is going to come in and definitely take care of that product that's definitely a need here.
Yeah. Yeah. And I would say, from Barry and I have actually been out here and walked this ground, walked this site, and a lot of the names on the screen here, you see our competition here in the middle. We've actually gone in, secret shop is what we call it, where we actually go in there and act like we're looking for a specific unit. And it was a hot day. So we try to make it in and out quickly and use that as an opportunity to kind of cool down. But we were surprised at how few climate control were actually available. I don't think we found a single 10 by 10 that was available that week. I think they only had like a 10 by 15. They told us that would be gone by the end of the week. So as you can see, there's over 380,000 square feet of demand, and that's total. And as Peyton was saying, when you break that down by what's available for climate control, there's a lot more demand than that. I would say, from everything we looked at, most of these, our competition, most of these other assets and locations, I would call them, more Class B, more Class C. They're a little older and definitely not sophisticatedly ran. And I don't see a lot of them. There's no REITs right here in our 3-mile range. But Barry, I don't know. Do you want to add anything as far as just kind of shopping the competition and here and priming our unit mix based off of what we see?
Yeah, you're spot on, Wes. We got, as you know, we drove this. We got through the 3-mile, walked into many facilities, basically no supply. The supply was mainly Class B and C, with all due respect. Worn, little tired product. Climate control was just not found. We're seeing a change. There's growth in the neighborhood. The biggie here, everyone, is we're 3.5 square foot per capita in this neighborhood, and this was a little bit of a diamond in the rough in regards to finding such a low supply in this area. You get around the country, most developers today are trying to build facilities in areas that are already north of 5. We've got growth here, and we've got growth in the right product, being climate control. Here's my 2 cents, Wes.
No, I appreciate it. Thank you. And kind of moving into the project itself, you can kind of see a good aerial map of where we're located and where we're going to be primed to kind of the heart and the downtown of San Antonio. As you can see, we're not far from the loop that goes around, as well as the Interstate 10 that runs through. Rigsby Avenue, as you can see, is one of those main avenues that run right through, and is we're right off of that. That's one of our main entry points, is right off of Rigsby Avenue, hence the name Rigsby Storage. So Daniel, I know you're going to be handling a lot of the project management yourself. Would you like to kind of cover a little bit of the overview of our project info here?
Yeah, absolutely. Appreciate it, Wes. And just to reemphasize, this is a prime location. It's going to have really good visibility and accessibility. As you can see on the next slide here, this is a 4-story facility. This is from the solid team over at Dallenbach Cole, and this is one of their strategic architecture designs. So this is going to be 95,000 square foot of rentable space on 2.5 acres. And so this is designed to really maximize the property land use efficiently and help kind of touch and meet the rentable space demand in this area.
Yeah, and from touring some of the other facilities, not to name drop too much, but Capco is our general contractor here. They actually met us on the site. They're the ones that have been involved with this project since the beginning. Barry and I, while we're out in San Antonio, we toured one of their other facilities that they did for a public storage that they had just completed not long ago. And it was very high quality. We were very, very happy to see. But, one of the things I can say, take credit for with Barry, giving the credit with his team, is he makes sure that we're working with the best for each project. We don't just go with the same person over and over again. He spends the time diligently selecting, all the engineers, the architect, as well as the general contractor, and really builds that strong team, that he's had experience working with. Barry, I think you've known Nick over at Capco for several years now, correct?
Yeah. A proven team in the industry. I must tell you, they've got, as many facilities that I've probably built. They've done their own. They've built actually for myself before. I've got a lot of confidence in them. They knew of this project before we were able to acquire it, so they came to the table with a lot of knowledge. We're in the midst of finalizing everything with them. I think we've got a good proven partner that's going to help us deliver this.
Great. Kind of looking at it from an aerial view, Daniel, I think you were kind of talking about some of the footprint here based on the survey here.
Yeah, absolutely. And good point about Capco there. So excited to be kicking off with them. So as you can see here, this is a little bit better bird's eye view here of how this property is going to be laid out. So one of the factors that really determined this project is accessibility, as Wes kind of mentioned. But you've got the North Drive here, right off of Rigsby Road. It's the main road in the area, and then a private road on the east side that separates you between White Road, which is another main roadway, and your property here sits just west of that intersection. So the surface area here for the travel area is kept in mind to accommodate larger trucks. A lot of logistical thought went into this, and we're going to be making sure that they've got adequately covered loading zones and be as convenient as possible. Kind of moving forward here, especially if there's any bad elements or weather or rain in there, they're still going to be able to access their valuables.
Yeah, and if you look at the bottom of the product at the page on the left, you see that open square footage. That's actually a retention pond there. So, for all the extra rainwater run over. I know this is in San Antonio, so, unfortunately, it doesn't get an abundance of rain all year round, but when it does rain, it typically does that a lot. So we want to account for that to make sure none of that water is running back into the facility, but at the same time, making sure it's kept well up to not block or hinder our overall goal here. So as you can see, we kind of mentioned the climate control versus the non-climate control units. We will have those 27 non-climate control units on the bottom floor there for easy access, and then the rest, the majority, wanting to hit where the you can see the demand with the lack of supply was really there with the 859 units. So, but yeah, moving forward here to kind of look at the overall breakdown, our sources and uses. We've had Rada and Peyton diligently looking at the best loan products, always trying to find the best overall capital stack for us. How about y'all give us a quick overview of kind of the page here?
For sure. Thank you, Wes. As an acquisition manager, as one of my key roles is shopping for debt and equity, and I do that with Peyton. So, and as a mortgage broker, actually, my extensive list of lender relation comes in handy for most of the projects that we work on. And talking about this particular deal, we actually shop this deal with SBA lenders, PE lenders, as well as traditional banks. And this particular loan terms that you are seeing on the screen is coming from one of the largest traditional banks. They offered us 60% of the leverage of the total project cost. They count total project cost as land purchase plus hard cost. So 60% of that is roughly around 7.3 million. They're pricing us on Wall Street Journal Prime plus half a point. That comes to 9% as of today on a 30 months of interest only period and 25 years of amortization. That brings our equity raise to 6.8 million. And just to kind of throw this out there, sponsor cost actually covers the debt service reserve for 24 months, which is roughly around 1.2 million, and other closing costs as well. So that's our loan terms. Wes, do you want to add anything over here, or Peyton?
Peyton, do you have anything?
No, I think Radhika, the biggest thing we want to be wary of in today's market is making sure that the debt can be covered. And there's no issues with paying off our debt payments on this project. So, I think it's a highlighted point that everyone should be aware of. We are bringing the full 24 months. This is a 2-year hold. We are bringing the full 24 months of debt payments to the closing table. So I think that's very important that we all see that and understand that. So,
yeah, no, I appreciate that. So, this is a full recourse loan. So, those that are signing on us, myself and a few others, we're really confident in this project going the full distance. And, we're going to continuously looking at all the way down to the closing, what is the best terms, the best rates that we can get for our product. So keeping in mind our overall end goal here, but kind of looking at, the targeted returns we're trying to do, look at a case study, what is all of the plan come together, and, what do they call it? The WIFM, right? What's in it for me? So what's in it for you and your money going to work here? Well, that's exactly what we're looking at. So like we were mentioning, we want to give a good cash on cash. Now that's based on our 10% pref. So our pref is accumulative based, so that we will get that to you by the end of the project, selling at the end of year 2. We really want to hit that 25% IRR. Now, as we've mentioned throughout here, we've gotten a lot of third-party studies, third-party reports. So it's not just, the way we see it. We've actually tailored our underwriting and our business plan under everyone else. So when you look at Argus's pro forma, when you look at the stored tracks, when you look at all of the other REITs in the area, to include the feasibility study and their projected rates or recommended rates, we're actually the lowest out of all of them. And we do that for a reason, so that we know that we're still hitting our minimums even at the worst case. Our rates here are kind of down low, below what most other REITs, even at Class B rates, are getting there. So if we were to look at this as a $100,000 case study, if you were to invest 100,000, now I know it says on the screen the minimum is 50,000, which that is the case, 50,000 minimum investment. But for easy math here and simplicity, we've got a $100,000 case study, which would get you about 1.4% of the overall ownership. And as you can see, that member cash flow being 0 year one and then 20,000 year two. That is from that accumulative based pref. We are not over raising to pay distributions. We did that thinking of the overall end goal in sight of not diluting the shares, but trying to get you the most amount of equity multiplied in this project. So total after that, you can see our net proceeds for profit are $35,000 and returning 100% of your $100,000 investment. Now that would make you a total of $55,000, and that's where we got the 55% return on investment. Now I love to under promise and over deliver, so that's why we're really saying these are our targeted returns. But we also like to think of this as, not how much can we help make you, but we also want to look at how much can we help save you. Now, I will say this and preference this with, I am not a CPA, a tax advisor, any of that myself. However, we did reach out to Madison Spec, and this is their expertise, and got this report from them. So this is a direct screenshot off of what they did. They also broke us down a $100,000 investment case study as well. So you'll see an 18,000 bonus of depreciation in 2024 and another 31,000 spread over the rest of the holding time. Now, 2024, I want to highlight that we cannot do our official cost seg until the building and the asset is put into existence, which is basically when we say CO or certificate of occupancy. So our plan is to start this project almost immediately after closing. And our goal is to have this finished before the end of 2024, and then get the engineers out there from Madison Spec to do their official cost segregation study. We will be hiring a CPA to finalize those K1s for all of our investors. So if you have your own CPA, your own tax advisor, by all means, I would say consult with them on how you can take advantage of the tax benefits of being invested in commercial real estate. Kind of moving forward there to wrap this up with our good timeline, we are looking at closing October 2nd on the land, and then giving ourselves a full year to complete the building, and then start the CO and lease up on that second year. Now we're saying sell of end of year two. However, with having Argus as a partnership and having a well network of other, private equity, other operators, a lot of other groups that we feel that would be greatly interested in picking this up. Our goal is not to hold it any longer than we have to. Our goal is to get your returns in the shortest amount of time as possible. So that is our goal here, and that's what we're going to start working on. So as soon as we know we have the CO in hand, we're going to start working on finding the best possible, I guess you could say, sell here. Now, our target here is based on an appraisal value, very much lower than what we're seeing some of the sales comps for a Class A product. So it has nothing to do with NOI or net operating income. We're not having to worry about necessarily cap rates. It's based on the appraised value of the building's completion. So kind of keeping that in mind there. I know we've got an operations team, but our exit is going to be based on hitting what we know our building will already be valued at. So moving into kind of the next steps, if you feel this is something that you would like to take advantage of and invest with us, we do have that portal available for y'all. It is a secure portal where you'll be able to gain access to not just this deal, but any other deal, review the documents, kind of look over a summary, re-download or review any of the information that we've gone over tonight. And then that will be your secure portal login. Then that's where you'll also see reviewing of the PPM or private placement memorandum, along with the subscription docs and our operating agreement. Those will be there for you to access. And then the final step 3 is filling out those documents and wiring the funds. We are using Chase Bank, JP Morgan and Chase as our business account. We, kind of looking at what happened earlier this year with some of the smaller banks kind of going under. We saw that JP Morgan and Chase was one of the branches, or I should say one of the banks, still not only keeping their doors open, but allowing others to a little bit of help towards the other. So we feel confident using a well-known bank there for our investments and into this right here for our investors' money, I would say. So we try to make it a 1, 2, 3 easy step process, but we understand that if you might not be computer savvy, we have a team here ready to go. I'm going to introduce them. But before I do, I want to let y'all know, if you have retirement accounts, I saw that as a question that popped up early, 1031s, self-directed IRAs, solo 401ks, cash, trust, any of those we have the ability to invest with those. So I'm trying to make it as convenient to our investors as possible to take advantage of this opportunity. My legal team would hate me if I did not at least discuss a disclaimer. I will save everyone here the boredom of reading this to y'all. Like I said, y'all can access this and read it. But in a nutshell, like I've said, we are not financial advisors. We are not CPAs. Everything that we've done has been conducted based on the best of our knowledge and our abilities. And, if you have an attorney or a financial advisor, like I've said, always consult with them if you have any questions. I also have my 2 managing directors here on our capital relations team, Jay and Adam. Their contact information is there. They can help you access the portal. They can help answer any questions. And for whatever reason, if they can't answer something for you, then they can always help you get on our calendar so that we can have a one-on-one if we need to help make sure that you feel confident in investing with us. I don't want to sell anyone on investing into something they're not confident with, but we are definitely fully committed to this project and seeing it all the way to the finish and keeping our investors, at the front of our mind all the way through. So without anything else, I appreciate your time. I think it's going to be great for us to go ahead and open up for some questions. I see we already got a few in the chat. So I'm going to go ahead and look at that here and start calling some of those off. But as I mentioned that portal earlier, I promised y'all I would put it up on the screen for y'all to access. That'll go straight to the portal, investwithmpig.com. So without that, let's go ahead and open it up for some questions. If anyone else has something that they want to ask, put it in the chat, put it in the Q&A, and we'll start taking some of those now. Jay, Adam, I know y'all are here. Do y'all have any questions that have kind of come into y'all so far?
Yeah, Wes, how you doing? This is Jay. I'm one of the managing directors, and we just got quite a few questions. I have one specifically coming from a Scott, I believe from Wyoming. He's asking if I have questions throughout the term of my investment, how can I get in touch with you?
Yeah, it's a great question. So, we're not going anywhere. We're actively wanting to work with our investors throughout. We want to make y'all feel like you are a partner. It's not just a thank you for your money, bye, but we want to consider you a partner, a part of our team, and just leveraging our hard work and working together. We will have that portal there that will also give you monthly updates as well as quarterly reports. But if you have a question specifically, you can always email one of the 2 gentlemen here, Jay or Adam, or reach out to our website, militarypatriotsgroup.com, and you will have access to sign up for a call that way. If you ever need it, you can always go to chatwithwes.com. That'll be directly to my website, but you will get to kind of the warm and fuzzy of how to get a hold of us and work with us and, have access to us as your partners in this deal. And that'll be throughout the entire whole time.
Nice. I have another one coming from Mark. Mark's from Arizona. He's asking, how do I keep track of my investments throughout the holding period?
That's a great question. Also in the portal, you will have, when you log in, you can say, you can see right there on the front how much you have invested with us, how much you've profited with us, how many different deals you have. It gives you a good breakdown of your almost like a stock portfolio is what it really looks like, how much of your money is invested in one project versus another. So it really does give you a good breakdown. We also, at the end of the year, will upload everybody's K1s to that same portal, and we password protect those as well. So even if someone hacks your portal, which I haven't heard of anyone having that happen yet, we still password protect any information that has your personal identification number. So that's something that we do. Thank you for that.
No problem. I have one more before I hand it over to Adam Shapiro. I have Janice. She's from New York. She's done over 18 deals herself, and she's asking who can invest with MPIG. Is this only for armed forces, or can anyone invest with our group?
I love that question, and it is something that I actually get quite a few times. The name is Military and Patriots. So about half of our team is military veterans. The other half is good old patriots. But we're coming together to make these opportunities for everyone. We really want to open this up to as many investors as possible. Now, this one is a 506c, so that's only for accredited investors. But as long as you qualify as an accredited investor, you're authorized to invest into this and with our group. We do have other offerings for our unaccredited as well. But yeah, we love to work with everyone.
Awesome. That's perfect. I'm going to hand it over to Adam, and I just don't want to not not let it be known. Doug from Illinois. We kind of answered the question. This is a 1031 exchange ready. So yes, you can utilize a 1031 to invest in any one of our offerings. All right. So with that, I'll pass it off to you, Adam.
Yeah, definitely. Nice to meet everybody. I have a question from Robert in Florida. They're asking, how do I transfer the funds?
You kind of broke up there. What was that? How do you transfer the funds? What?
For an investment?
Yeah. So we actually have in the portal, once you go through your documentation, you fill everything out electronically. You will get a screen that shows you the wiring information to the business account for the Rigsby Storage. So that'll be available.
Okay. Chris in New York is asking also, what kind of documents do we need for accredited investor?
Yeah, so you do need that letter certifying that you're an accredited investor. Your CPA or a FINRA rep can provide that for you, as well as I know there are some free websites that you can fill out. We'll provide a link in that. I'll make sure that gets added into the portal and the summary of this deal. That's a clickable link that you can access that website, fill it out, and then it'll get you that letter as well. That's a great question.
I don't know if we answered this fully. They can invest through their IRA?
Yes, they can. As long as it's a self-directed IRA, they can reach out to their custodian at whatever group they use, whether it's Quest or IRA Club or whoever it is. We've taken several investments through IRAs and worked with them. So our documents are easy to work with other IRA reps and our IRA-based accounts.
Okay. And one other question I see here, there's a couple other ones, but sure there's going to be a few more trickling in. Was it Gregory from California? Can I invest through my LLC or LP account?
Yes, that's a great question. We do actually have a few people that prefer to do that. We can also allow it if it's a trust. So if you're one of those that has set up a trust for your family or for yourself, you can invest either with an LLC, an LP, or a trust account. It's a great question. I see one here that came in on the Zoom chat straight. It said, what is the impact of a multi-floor and climate control? Are units priced the same on the floor 1 versus floor 3? And this is a multi-step question. What are the customer's perception of units requiring an elevator? It's a great question.
I can help out on that, Wes.
Yeah, go ahead.
Yeah, no problem. In today's market, I think that was by Philip. Storage is matured. It's matured like hospitality, like aircrafts. We have dynamic pricing in our interior units, even our exterior units today. So we're working to drive revenue at those preferred locations closer to the elevator. You're going to see a slightly higher priced unit versus down the hallway, 10 to 12 units away. So with Argus and our internal team, we're going to work hard to ensure we've got dynamic pricing that really pushes the revenue model.
Thank you.
And if I could say one thing on top of that, Wesley, just because that was my experience. I was running 130,000 square foot, 4-story facility, very similar to this one. And one of the questions that Philip had asked is a deterrence or, for customers to do that. That's why we provide, in these facilities, we provide flatbed carts for our customers to move their items from, outside to their inside into their storage unit. During my tenure operations, I really didn't have that many customers complain at all. They understood, especially with the market that this is going in and the market that I was managing in as well, is that that was just what was the product that was offered in that particular area at that time. And exactly like this product for Rigsby here, there's not going to be a lot of options for our customers or for the people in that area to go to. So that's why we can definitely take advantage of that with this facility.
Thank you. Thank you. All right. Well, that looks like everything here. Let me check one more time. See if there's any other last minute questions that are rolling in. Okay. Looks like looks like the chat is locked is what I'm getting, a private message. But if you find the Q&A tab, it's labeled Q&A. You can post your questions there. So I'll give everyone one more minute to find that if they've got any more questions. And if unfortunately you weren't able to get your questions or you're watching this on the replay, feel free to reach out to us. We are going to send this out to everyone that registered, as well as some of the other people that we know we're in contact with. So feel free to get a copy of the recording, as well as if you need to just sign up for a one-on-one call. We've got Jay, we got Adam, we got myself that are more than happy to meet with you and go over anything that you might want to know. All right. Doesn't like anything else, so it looks like we covered most of it. I appreciate everyone's time. Thank you for attending, and all the panelists here and all my team. I appreciate you being in the fight with me. And let's wrap this one up. I'm excited about kicking this one off. So thanks, everyone. Hope you have a good night.
Yep. Have a good night, everybody.
Thank you.